Okay, we are live here. I think I figured out the sound issues a week or so ago. Let me pop over and I'm going to copy this into the Discord.
All right,
wait a
welcome
minute,
in.
wait a minute. Let's see here. We should be over here on my channel. Let's just give this 1 minute. I don't want to see that. I want to go over to play all.
All right, welcome in.
Here we go. Stocks nearby points. Is this the one I want?
I want to go over to play all.
This is the one.
All right, welcome in.
Here we go. Stocks nearby points. Okay.
Is this the one I want?
Turn down the volume. Get this going. Sorry to make you watch this. Stocks nearby points. Okay. All right. I think that's what we want there. Okay, here we go. Got enough of listening to that little reflection of a different video. Okay, so these, as the title says, these are some stocks that are on my watch list of those approaching buy points. And I have some pretty strong, some strict settings on these. I really only want to see those that have some good earnings growth. So you see right here some earnings acceleration, went from 29% earnings growth in the quarter ended September 2020 to 38% to 102. This is Fox Factory Holdings, by the way, and they manufacture mountain bike gear. You've probably seen the logo. It's like a cool little Fox logo. So this, not a surprise that this stock has done very well in the past year and a half or so, because what happened in the pandemic? Everybody started getting outdoors, right? So that's what began to happen there. Just checking my list here to make sure that I got everything. Yeah. Okay, so we saw here that this went higher as people were enjoying the great outdoors because they were bored with the great indoors. And right now, what I like about this stock is after that big run up there, and let's just take a look at the monthly chart, you can get a little better perspective. So here is, I'm going to guess that's April 2020. Yep. You can almost look at that. You can see February, March 2020, everything pulled back. We just got some data recently that actually the recession was a 2-month recession in 2020, and it ended in April of last year. Now, the stock market and the economic indicators are not always coinciding. This time they just happened to. So you did see the market rally began in April. So this is the monthly chart for Fox Factory Holdings. See, this went up, and this was towards the end of the year. Yep, we did see a few pullbacks. It's very normal to see a month or two that stocks are down. This was down just fractionally in March of this year, just less than a percentage point. And here's where we are right now. So you can see some sideways trade that's been going on for a while. And if I pop back over to a weekly chart, really nice consolidation here, corrected 16%. So let's look at this high point. That was from the week ended April 30th, high of 166.88. And it actually, look at this, 166.89. I'm going to go over to a daily so we get a little more of a granular look. That was today. So that's interesting. What's this telling us? This is telling us that there's some resistance level right there, 166.88, 166.89, and what happened? It hit that, the stock reversed lower. There's some resistance right there to overcome. So keep an eye on this one. Traditionally, when I was at Investors Business Daily, I worked there for 10 years, the idea was if you saw a stock pass the buy point in heavy volume, the buy point being the prior high in this case, in heavy volume, you wanted to see it surpass that by at least 10 cents just to confirm the rally. So in that case, you'd be looking for 166.98. I don't think that's a bad idea. And what that does in practicality is it means the stock may have what it takes to surpass this kind of resistance. I mean, I think that's just fascinating that it hit resistance just essentially at the same place as before. So that's what's going on with Foxconn. You see the earnings are due in 10 days. That could tell you something. You know, you're getting down to this point where you're even seeing a stock that's about to clear a base. But when the earnings are coming up in 10 days, what does that mean? Might you just wait for that? I mean, unless the thing really starts to reverse higher in the next couple of sessions and significantly starts to rally, you know, and then you can decide to sell before earnings, or if you decide you're just going to hold through and essentially take a gamble on that. Because even if a stock beats what Wall Street expects it to earn, oftentimes there's something in that earnings report that still causes Wall Street, the institutional buyers, to send the stock lower. You know, and often what that could be is maybe some kind of guidance that's a little bit disappointing. These days we're having supply chain shortages. That could be disappointing. You know, I read something totally irrelevant to this particular company, but when I guess Sam Adams, who is the owner of the Truly hard seltzers, which I enjoy, but apparently the hard seltzer market has peaked. And they're seeing sales of Truly that are not as robust as they had expected and as Wall Street had expected. So that's the kind of thing that goes on here, is that if there's something potentially in the report that Wall Street doesn't like, does not meet expectations, it could send the stock lower. Now you see, there are pretty much great expectations for this stock. Here's the yearly expectations here for $4.01 for full year earnings, up 34% over 2020. And you do see here, you had 2020 was $2.99 per share. That was clearly up from $2.71 per share in 2019. That is the thesis about everybody getting outdoors during the pandemic. And we're seeing analysts expect another 15% growth to $4.61 per share in 2022. So that's what we got there with Foxconn. Let me go back over to Foxconn. I can't believe I said that. Foxconn is the Apple factory in China. This is Fox Factory Holdings. Totally different, unrelated company. It's a US-based company. And let's see, they're actually based in, let's see, Brazelton, Georgia. Okay, high performance suspension products used on mountain bikes and off-road and all-terrain vehicles. Okay, so that's what we have over there. And in fact, we can pop over to and just take a look. Let me just check and make sure we're seeing that. Yeah, we are seeing that over there. So we can take a look and see. There's the little Fox logo right over there. Here's some of the products. I mean, definitely outdoors related, for off-roading. So yeah, really very much of a perfect pandemic type of company, right? So let's look at DocuSign. Here's another one, another great pandemic company. You know, I had been using DocuSign for years, and what these are the electronic document signature services, okay? And, you know, I remember in the past when I had my financial advisory firm, and sometimes you'd send these out to people, sometimes they couldn't figure them out. It was really, had not gotten wide adoption until what happened? Where people needed to sign legal documents, all kinds of different paperwork without meeting in person back in 2020. And that's when something like DocuSign really took off. And it was also a new IPO, went public in early 2018. Stocks within their first 15 years or so of being publicly traded companies, that's often when they notch their biggest gains. Okay? So let's see. Yeah, so this is very interesting. Only had a little blip of a correction back in 2020. And let's go over to a monthly chart and you can see, yeah, see, I think everybody kind of realized the potential for this. Look at that. March 2020. This stock was up 7%. You don't see that too often, folks. That is not, most stocks were down, and most stocks were also down in February 2020, back when the first alarm bells about COVID-19 started to ring. So you see this had a beautiful run up in 2020, kind of a little bit sideways lately, some profit taking. That's okay. Let's go over to a weekly and let's take a look at what is happening with the fundamentals over here. So obviously we're past fiscal 2021, you see, because the company reported earnings of 90 cents per share. Now we're looking at the estimate for fiscal 2022, and analysts are expecting $1.66 per share, up 84%, and again, another 28% in 2023. And okay, we're seeing a correction here. Interesting that that's corrected 38% so far, and that's why it kind of helps to look at these, because that looks like a fairly shallow correction here on a weekly chart. Let's go over and take a look at it on the daily, and I go back and forth between the weekly, daily, monthly. Sometimes I use intraday. They can all give you a different perspective. So yeah, this kind of helps here. You can see that this one was kind of sloppy. Now there's, in some ways, you can't really construe this, I don't think. Let's see, as a double bottom, I'm thinking out loud, but I should finish my sentences. So this looks like it fell to 188.91 was the low over there. Then over here, the other low was about 180.55, 179.49 was the low. So the second low did undercut the first, and then you did see that midpoint was 236.11. So let's look at what happened when it cleared that 236.11, and that didn't happen for a while. You see, well, there it is over there. Let's see, right there, 240. Trying to get the right day. So it was in early June, June 7th. It rose to 244.65. So it did clear that midpoint over there. And on the day that happened, okay, let's see here. All right, there we go. On the day that happened, you had heavy volume that was on an earnings report, okay? So again, that sort of makes my point, right, about what happens on an earnings report. If investors like what they hear, they can send the price a lot higher, but sometimes if they don't, it can send the price lower. I'm just going to refresh this because it's kind of freezing a little bit. And I know what, I'm going to come back to DocuSign over there. Sorry about this, folks. This is live entertainment over here. Okay, let's see what it comes back to here. Okay. So anyway, for DocuSign, I'll just keep talking about that while waiting for the charts to load again. On DocuSign, clearly another one of these pandemic plays. Looks like the DocuSign chart is going to load. It rose on the earnings report. And I did notice when I was looking at the weekly estimates over there that Wall Street did appear to have raised their estimates recently. So expecting more from this company. And it kind of stands to reason, doesn't it? That even pandemic aside, who doesn't want to sign their documents remotely? Boom, boom, boom. I'll give you an example. I go to Orange Theory, and I went to a different studio recently than my home studio. And I needed to sign some waivers to attend this different studio. It's just a one-time thing. And it was great because in the past, I can recall that a studio would have you come in. Maybe you could do it before class. They'd have you come in and sign it. The woman over there sent me the DocuSign paperwork, and I was able to do it ahead of time. So it was all done, ready for me when I came in, and there was nothing else to do. So super convenient. Who doesn't want that? We're never going back to all that paper stuff. And I sold a house recently, pandemic, but I do know that there's a lot more that you can do online today, even with real estate, than in the past. So this is only going to grow. So where are we at right now with DocuSign being near a buy point? I'm going to go back over to a daily, and we can take a look at where this stock is trading relative to the key moving averages. So you've got a few days here of tight trading. Before I bought this stock, I would want to see it pull back. Now you see that green line there is the 10-day moving average. That's the shortest term moving average I've got on here. You could do a 5-day, you could do a 3-day. I've got a 10-day on here. The next one is the 21-day, okay, a little longer price line, 50-day, 200-day. If this one pulls back even to that 10-day or 21-day, gets support there, you could consider a purchase. Moving averages are just great indicators where to consider a purchase. So again, like Fox Factory Holding, I would not purchase this one at this time. It's kind of near a place you could buy. I would just let this play out a little bit longer, okay? Let's go to the last one I had for you today, which is InMode. And this is an Israeli company that makes equipment for cosmetic procedures, okay? Another pandemic play. Why? Everybody's looking at themselves on Zoom, on video, and thinking, oh, hey, I don't look as good as I thought I did. The camera does a lot of different things, right? So I think that's another reason here. So we're looking at a daily. Let's go over to a weekly chart for InMode. Another recent IPO, went public back in late 2019 over here. My internet's a little slow. I think it's just because I've got so many. I've got the live feed going and I've got this chart program going, so we're just going to have to live with that. But you can see it went public back in August 2019, so almost exactly 2 years ago. And here again, very nice steady rally out of the big 2020 pullback, right? Trended nicely along that 50-day line. Now technically it's a 10-week line, right? I talked about this in a video the other day. It's the 10-week line. If you're looking at a weekly chart, go over to a daily. Hopefully this won't take 20 minutes to load the daily chart. Okay, there we go. And you see it's been trending nicely above the 50-day. 50 days the red, so it was well above that. Came down here, found support in the vicinity. It did pull back a little bit recently, but rebounded nicely, found support. So right now, this is what I was talking about with DocuSign that we were just looking at. Nice support there at that 10-day moving average. This is kind of the first one I've seen of the three today that could be at a point that you could actually make a purchase right now. Scratch that. Based on the chart, I would have said that, but you have to incorporate all the data. Here's why. EPS due in 2 days, okay? So 7/28, that would be Wednesday of this week. I'm recording this on Monday, the 26th. Don't do anything on this one yet. Wait for it to report. Now here again, big expectations, okay? Analysts are seeing 45% earnings growth in 2021, another 8% expected for 2022, and you see this one has had a nice sequence of earnings growth, right? From a penny per share in 2016 all the way up to $2.11 per share last year. Let's scroll down here and just take a look at the quarterly earnings. There we go. Okay. So you see, yeah, you had you did have some slowdowns here, not losses, just some slowdowns in earnings growth in 2020, but that rebounded in the last couple of quarters. And again, you have acceleration, right? 26% earnings growth up to 104%, so it doubled. And then more than doubled again, 130% earnings growth to 69 cents per share. These are year over year, by the way, not sequential, because you might be saying, wait a minute, 69 cents a share, that's not higher than 94. You're looking at the March 2020 quarter when earnings were 30 cents a share. So you see that's where that grew, okay? So you also have over here revenue growth, nice acceleration here from 49% to 60% to 62%, only one period of time when revenue slowed was in that quarter ended June 2020, okay? And even then, remember, you don't have negative revenue. You either have revenue or you don't. Now, sometimes you have revenue offsets, things like that. But think about sales. You either are making sales, right? You're making income from your job. You can put this in your own personal life, right? You either have income from whatever your different sources are, or you don't. The money you pay out, those are your expenses. Your revenue is your revenue. So you're not going to have negative revenue. Okay, so those are 3 stocks today. I would not at this time buy any of them right now, and let's just review the reasons why. We'll go back to DocuSign. So on DocuSign, it's a little bit extended, and you would really prefer to see some kind of pullback right here to one of these moving averages just to flush out a little bit of the excess, okay? And that may be happening right now. So then on Fox Factory, what you have over here, the reason you really don't want to buy this right now is because we still have not overcome that resistance above 166.88. It tried, hit resistance again. Keep watching this one, earnings in 10 days. You know, we'll see. And then the final one, InMode. That chart looks pretty good, but the problem is you've got the company is reporting earnings in 2 days. You don't want to buy something, initiate the first position in a stock 2 days before earnings. Okay, that's what I got for you today. Thank you. Love you guys. Appreciate you watching. And I will be back soon.